Friends, in our last video we have discussed on basics of income tax, and which is on different, we have learned some basic definitions just like as previous year, assessment year, SSC, and salary. So salary, the term salary signifies a recompense or consideration given to any person for pains bestowed upon another person's business. For pains bestowed upon, to given your pains, your labor, your works to the another person's business, for that you have been recompensed, and that is you got in the term salary. And that salary is the income for which you have to pay tax. So what are the tax treatment of different receipts? So salary, it consists of different receipts. It has got different terminology of different portions of the salary. So different items, which is the different items, or what are the tax treatments, we'll define like that. So items, the first items in the salary slip is basic salary. So what is how basic salary is treated in tax? Basic salary is totally taxable under section 15 of the Income Tax Act. Similarly, DA or dearness allowance is also taxable under section 15. What now? Advance salary. If you get advance salary, this is also taxable in the year of receipt. The year in which you receive this will be taxable. Then arrear salary. It is also taxable in the year of receipt, if not taxed on due basis. If not taxed on due basis means it is due but you have not received. If it is not treated like that, if it will be taxable in the year of receipt only. Okay. Then comes leave encashment at the time of retirement. So we all those who are salary income earner, at the time of retirement they are being paid the leave encashment at the time of retirement. This is exempt in few cases. In detail of this we will discuss in later. Now it is exempt in few cases. What are the cases? What are the cases, and what are the limits, and how much and what will be given for that? This will be discussed in later in detail. Salary in lieu of notice, taxable on receipt basis, totally taxable on receipt basis. Now salary to partner, not chargeable under the head salaries. Salaries to partner. Suppose in a partnership firm you are a partner and you are getting salary per month. So in that case, the salary that you receive from the partnership firm will not be treated as a salaries. Okay, it will be treated as a profits and gains of business or profession. This is not chargeable under the head salaries, but taxable under the head profit and gains of business or profession. In case of salary to partner, this is in case of partnership firm and salary from partnership firm. Then comes fees and commission, taxable under section 15. Bonus, taxable under section 15. You got bonus. Okay, so bonus is also taxable under section 15. Gratuity, there is some, it's exempt in some cases, but a detail of this we'll discuss in later, while we'll discuss in the exemptions part. Pension, exempt in some cases. There is a limit how much is exempted, how much is taxable, but that we'll discuss in detail in our later. Then annuity from employer, taxable as a salary. If it is employer gives annuity, it will be taxable as salary. It will be taxable as salary. Then annual accretion to the credit balance in a recognized provident fund. Excess, there are the two conditions. Excess of employer's contribution over 12% of salary is taxable. Excess of employer's contribution above 12% of salary is taxable. Secondly, excess of interest credited over the notified rate of interest, that is 9.5% per annum, is taxable. Excess of interest credited over the notified rate of interest, that is 9.5% per annum, is taxable. Then comes contribution by central government or any other employer towards NPS. NPS means National Pension Scheme. So this is taxable as salary. Retrenchment compensation, if you retrench from the service, then there is some exemption. That details we will discuss in our next. Remuneration for extra work, totally taxable. Voluntary payments, taxable if payment is made with reference to services rendered by virtue of employment. Totally taxable. If it is during your service being paid, it will be taxable. A lump sum payment made graciously or by way of compensation or otherwise to the widow or other legal heir of an employee who dies while still in active service is not taxable. Okay, if an employee dies during his service while performing his service, then any compensation is paid graciously or compensation is given to his widow or other legal heir is not taxable. Not taxable. Salary from United Nations organizations, okay, not taxable. Salary to foreign citizen, exempt in some cases. We will discuss it later on detail. Payment receipt at the time of voluntary retirement, totally exempt. Now allowances, salary, then allowances. Allowances and how the tax is treated on allowances. So you get differences allowances in the salary slips and how the tax treatment is. I will define. Now discuss one by one. City compensatory allowance, this is taxable. House rent allowance, exempt in some cases. House rent allowance we will discuss in detail. What are the exemption limit, exemptions, what are the taxable part, what is non-taxable part, that what are the exemptions, that we will discuss in detail in house rent allowance. Now entertainment allowance, this is also we will discuss in detail, but now it is exempt in some, there is an exemption in some cases. That cases, exemptions and deductions we will discuss later. Special allowance, for notified special allowance are exempt. Foreign allowance exempt from tax if paid outside India by a government to an Indian citizen for rendering service outside India. Okay, section 10(7). Tiffin allowance, fixed medical allowance and servant allowance taxable under section 15. Allowance to high court judges not taxable. Allowance from a United Nations organization not taxable. Allowance to other foreign citizens exempt from tax. Compensatory allowance under Article 222 section 2 of the Constitution of India not taxable. Allowance of teacher, researcher from SHARC member states exempt up to 2 years. Sumptuary allowance to serving chairmen or members of UPSC, United Union Public Service Commission, UPSC, not chargeable to tax. Allowance to retired chairmen and retired members of UPSC, an allowance subject to maximum of 14,000 per month for defraying the service of an orderly and for meeting expenses incurred towards secretarial assistance on contract basis is not chargeable to tax. Any other allowance taxable. Then now salary is gone, then allowance is gone. Now perquisites. What are the perquisites? What is perquisites? May be defined as any casual emolument or benefits attached to an office or position in addition to salary or wages. Listen carefully. May be defined, perquisites may be defined as any casual emolument or benefit attached to an office or position in addition to salary or wages. This is in addition to salary or wages. What are the benefit attached to the position is perquisites. Number 1, furnished and unfurnished house without rent or at concessional rent. Not chargeable to tax if provided in a remote area, but other than remote area it has got taxability. Service of a sweeper, gardener, watchman or personal attendant not taxable if the employee is a non-specified employee. We will discuss specified and non-specified employee in our next video. Okay. Supply of gas, electricity, water for household purposes, not taxable if the employee is a non-specified employee. Fourth, education facilities provided to the employee, not taxable if non-specified. Leave travel concession, there are two conditions. Number one, not taxable twice in a block of 4 years. Not taxable if the employee is a non-specified employee. Leave travel concession, again, number one, not taxable twice in a block of 4 years. Okay, in a block of 4 years, twice not taxable. Number two, not taxable if the employee is a non-specified employee. Okay, so these are the perquisites, allowances and salaries we have discussed in this video, and the next we will go in detail about different aspects of allowances, different aspects of salaries. While we have discussed the exemption, what are the exemptions, what part is taxable, that's like a leave encashment, like retirement benefits and all. There is in detail we will go through in the next video. Thereafter, gratuity, pension, so everything they have some exemptions, and what are the conditions for that to fulfill, how much exemption to be given, that we will discuss in the next video. And retrenchment compensation, then remuneration for the extra work which is taxable, but and then allowances we will go for household allowance, section 10 section 13a, section 10 subsection 13a. This will also will go in detail. Entertainment allowance exempt in some cases, but it should be, there is some conditions for that we will discuss in next videos. Then with it comes the this perquisites will also for house and allowance, this furnished house without rent or at constitutional rent in case of non-remote area. Then this also will discuss in detail. Then specified, non-specified employee, all we will discuss in our next video. Thank you for watching this video. Please subscribe my channels and like the video. Thank you very much for watching the video.